Good afternoon, everybody, from a sunny 31 degrees and clear Gloucester. I was down in Sydney for the first half of this week, working with our team on a lot of our smart beta execution and our mean reversion strategy execution as well. Finishing up the week here in Gloucester, though. Let's hop straight into the five biggest economic developments for the week. Firstly, USCB consumer confidence slumped to 106.7. This was a contraction from previous readings of 110.9. It demonstrates that in an election year in the US, we are seeing the consumer in the US be a little bit more concerned about what the economy, the government, the political structure is going to be looking like as the year comes to a close later this year. Number two, Australia's CPI held static at 3.4%. Expectations were at 3.6%, so it was lower than expected. However, it was in line with last month's reading of 3.4%. We can infer that interest rates and higher levels of interest rate are continuing to work their way through to the economy. This has been a pretty consistent theme over the last 3 or 4 months. Number three, New Zealand left interest rates unchanged at 5.5%. It's the 5th consecutive meeting that they've held interest rates at 5.5%. And their commentary has stated that, yes, they are seeing a decline in inflation. They are also seeing a decline in output, which they are focused on and somewhat concerned about. However, at this stage, it does not justify them going and cutting rates or increasing rates. So holding is just generally what they have said that they are going to continue to do. Number four, US preliminary GDP faltered at 3.2% quarter on quarter. This just demonstrates that we are seeing the impact of economic slowdown or impact of interest rates on an economic slowdown. The prior figure was up a little bit higher than 3.2%. So it just demonstrates once again that higher interest rates are flowing through the economy. The US Fed needs to be aware of the slowdown and the degree at which it is slowing down their economy. If it starts to slow down really aggressively, then obviously that's going to mean that they're going to need to do something to either stimulate or through monetary or fiscal policy to ensure that economic growth doesn't fall off an absolute cliff. Number five, Canadian GDP stagnated at 0% in December. This was a decline from November's reading of 0.2%. Again, same sort of thing. Demonstrates that interest rates are having an effect and it is forcing a slowdown in economic growth. We can see that over these 5 points, you've got consumer confidence. So the consumer is less confident about the future and less optimistic. CPI is missing expectations. So we are seeing a contraction or deflation. Interest rates are being flat, and US GDP and Canadian GDP, and this is pretty consistent across the globe, GDP and outputs from global economies is starting to slow down. So most central banks will continue to be aware of this and really keep focused on that. As per usual, here is a summary of the basket of futures markets that we follow. You can see that there's some really big moves on the upside with orange juice, cocoa, oats, lean hogs, cattle, coffee, and if we as a consumer are the ones that are spending money and we're going out and seeing oats increasing, breakfast materials increasing, and bread becoming slightly cheaper. Down here, you can see wheat declining, you can see corn declining. So it is a little bit of a mixed bag, but generally we have seen some of these consistent themes. Orange juice, cocoa in particular, have been hitting new highs over 6 months, 12 months, and some even hitting, like cocoa, all-time highs. Here is the Australian heat map. You can see that over the last 7 days, it has been a rather bullish, bullish on the whole week. Banks have been very strong. Materials, BHP, Fortescue, Rio have been pretty weak. A lot of that is the decline in iron ore prices, Fortescue being the worst, down 5%. We also have Newmont has been quite horrendous, Gold prices haven't been that bad, but Newmont has been selling off really aggressively. A few bright spots here with PLS and MIN having good weeks. And the other thing to note and the other comment is Square 2 or Block. They have started to experience a rebound in their business. And you can also see this coming in from some other Australian listings like Kogan and Temple & Webster and Universal Stores, because they're seeing an increase in transactions, and Square is also seeing that increase in transactions, which resulted in their share price increasing by 20% over the last 7 days. Here is the Frame Funds Trend Barometer. Essentially, it captures short and long-term trends of positions within our universe that are hitting new highs, new lows over multi timeframes. Generally, there is a positive correlation between the number of constituents within our universe hitting new highs and lows and to the annualized rate of return of the strategies. So you can see here, sort of mid-February, we had a period where around about 40% or 35% of the universe were hitting new short term either highs or lows, which demonstrates that the activity level that fund has had over the course of the month would have been very, very high through here. You can see it's dropped back a little bit as some trends have started to become a little tired. And by them becoming a little bit tired, we are not seeing as many new constituents or as many constituents within the universe hitting new highs and new lows. So this is a really good thing to continue to monitor. When you see this spiking higher, you know that a lot of commodities, currencies, fixed income futures have been moving and going through significant either highs and lows, which is very notable. Other than that, I hope everyone has a nice weekend, and we will speak next week.